Hey, everybody, this is George, and I just wanted to welcome you guys to an absolutely amazing show again today. We're using our new software. Hopefully, this works a little bit better. We shall see. Anyway, the key thing is make sure that you like and subscribe. The benefit to this is, again, there's no cost. It just allows you to make really the best business decision, for when the time is right. So anyway, we'll cross that one over. So really, at the end of the day, people are going to be saying, well, what do you mean, George? Why is it that you're saying that sideline buyers, well, they're actually going to pay the ultimate price? What do you mean by that? And that is this. So right now, we have seen mortgage rates coming down. That's awesome. We've seen inventory going up. That's even better. Now, if we take a look at that and we know that our competition is lower and sellers are a little more negotiable, okay, well, that is like the best buyer alternative that we have seen in the last 3 years. So why would somebody be sitting on the sidelines when now is the perfect time to be purchasing a home? It's a really great question. But don't listen to what I have to say. Let's go through and talk about some of the metrics that are out there, and we will talk about, again, our market. So first, after 4 consecutive 0.75 or what we call 75 basis points, 0.75%, 4 of those, the Feds have increased their rate. All right. They're going to do it again towards the end of December, and it's probably going to be probably 0.5%, but realistically, that could be, again, 0.75%. But our numbers are actually coming in fairly well, okay? So according to the Wall Street Journal says 70% of households with mortgages have rates below 4% and are reluctant to sell. That is 100% what we've been saying before. Why next year, 2023, we are not going to see a huge increase in inventory, because there's a lot of sellers out there that are not willing to trade that psychological, I have a 4%, well, really between 3 and 4% mortgage rate. Why would I trade that for 6%? It's a really great question. So let's take a quick gander at this chart right here. All right. So as we can see, just in the last, say, week, which is our running day, 7-day average, you can see that we have basically 502 homes right here that are coming on market, right? However, we've got 895 that went pending, 660 that actually sold. So if you're curious if there are some buyers out there that, are quote unquote being proactive, the answer is yes, and in an amazing way, in better numbers than what we have been seeing historically. So as we take a look at what is the market doing, well, let's just take a quick gander at when we talk about, let's head back to here. When we take a look at just what's happening and we look at it on a historic level over the last 12 months, and you might say, oh my gosh, George, the light green is inventory. We have massive inventory that has been coming up, really since about February, March, April. We started seeing that increase. And you're looking at the prior year, because a lot of people, they do year over year, just like we do. However, it is super important to pull in perspective, because when you look over here, remember, in my 30-year career, as of about May, June of 2020, if you go back and you watch our weekly videos, you go back to, May, June, July, you'll hear me say, oh my gosh, this is the first time sales exceeded, number of homes that were available. And it kept going. Were we going to have a trifecta, when July rolled around? And it was like, oh my gosh, it did. And amazingly enough, in May, June, well, really March or April, May of this year, we saw again almost month to month, 2 years apart, that flip-flop, getting back to a normal market. You might say, well, George, what does that mean? Well, here we go. Here's the last 10 years. When we look at the chart, we look at the metrics over the last 10 years, you can see we are very consistent with where we need to be. The thing that changed the most is the light green that you see, which is the number of homes available. Now, as we were coming out of the Great Recession in 2014, you can tell we have massive amount of inventory. And if you go back to our 2015 videos, yes, because we actually go back to 2007, you will actually see that we had and started talking about first-time home buyers coming into the market, move-up buyers coming into the market, industrial investors, what we call the Wall Street brokers coming in and paying cash, your REITs and your hedge funds. And you can see how we started drawing down that inventory. And then you can see in 2020 to 2021, through those years, there was, inventory was seriously limited. Then interest rates double. We start getting inventory. We start, unchecking the pending box, right? Okay, so we take a look at this and we're like, okay, so what are you saying, George? What's going to happen here, right? So when we take a look at some of the really interesting things, we take a look at Case-Shiller, right? So according to Case-Shiller, it says, Seattle prices fell 2.9% month over month, but rose 6.2%. That's on average year over year. While nationally they slid 1% per month and rose a 10.6% year over year. All right. We still saw the predicted appreciation, just a tad bit less than what we saw what we predicted, just a tad bit less, I guess, than what we predicted, right? Because basically, when we actually take a look at mortgage, so we've had 4 consecutive weeks of interest rates coming down. And due to the increasing concerns over kind of the lackluster, economic growth, we've been seeing people going into the bonds, which has improved bond rates, which reduces the actual mortgage rate. So what's super interesting is that if we take a look at this and we look at home buyer sentiment is still at its all-time low. Why? Well, because you have higher interest rates, you have high home prices still, and so the affordability, okay, which is what we're going to run into a problem next year. Affordability has been seriously lacking. If we're suffering on all 3 of those, basically interest rates and prices and inventory, naturally, we're going to have an issue with a buyer perspective as to what we feel is a really great value. Now, as we come in, and you might say, okay, George, that's a 10-year running, but you've been talking about new construction. So when we take a look at new construction, you can see here, again, our inventory fell in 2021. That's that big gap that you see on the right-hand side. Whereas historically, you can see where our inventory levels have always been where they're at. Well, guess what? Right now, okay? And we continue to see that. We will be seeing some plats sit a little bit longer. There's still a lot of motivation. Again, right now, without a doubt, is the best time to be buying new construction. The best time right now is to buy new construction for all of the great reasons, including getting massive, basically perks into your purchase agreement. Sure, we're not going to see too much of adjustment on price, but what you get on the backside, what we negotiate is between $60,000 and $100,000 of upgrades, of improvements, of buy downs. Things that you would normally have to pay for, you're getting those taken care of. It is a huge benefit. That is totally different than what you've seen the last 2 years, where you were escalating to get the basics. That's it. So, absolute best time between now and the end of the year. Just saying, those big, Wall Street builders, they need to get product off because they are accountable. All right. So, when we come back and we actually take a look at what is the weekly housing trend according to Realtor.com. This is their latest chart that happens to come up. As you can see, it confirms everything we're talking about. So we've got our median list price, which has been actually in an upward trend the last 4 weeks. Why? Well, because rates have been coming down. Active listings have been still going up and up a little bit more than what we expected, because there are some sellers out there that are saying, hey, now is the time to sell. And for buyers, there's no better time than to get in front of sellers right now. With that time on market, sure, time on market is longer, seasonally longer. and we're going to start to hit a fall off here in about a week as we fall off until after the new year. Why? Not many people put their home on the market for Christmas and New Year's. Just saying. All right. Mortgage rates. Mortgage rates are down almost a full point, 6.33. It was actually more than a point last week, but we're at 6.33. We're at 7.25, 7.375 4 weeks ago. So we're already down 1 point. That has helped a massive amount of folks with being able to purchase and are stepping up to the plate. We're seeing buyers being very active and sellers being very open to a lot of different options. Why? Because every buyer that comes through their home right now is super, super valuable. Every single one of them, right? Okay. When we take a look at the higher mortgage rates are putting a monthly payment out of reach for many, given that home prices were at an all-time high 6 months ago. So a meaningful adjustment in comp values, meaning comparable properties. What I was trying to say, or what they were saying, is this. Listen, we've had a long-term amount of homes that were being escalated, in fact, 2 years, right? But because we have such a limited inventory, and even though rates are going up and we're seeing some price corrections or some price adjustments, it's going to take a while for those comparable properties to come into play. And it's going to take a long time because we're not seeing a ton of sellers coming on, again, because they're not willing to trade what they've got as far as an interest rate today. They're willing to make improvements on their home. They're updating their home. They will buy that other home instead of selling the existing home right now. Why? Well, it makes absolute perfect sense, right? Okay. Again, remember, new markets require new and adjusted tactics. Putting your home in the MLS, that is not marketing. That is a message to sellers out there. Look, you need to make sure that the person that you're interviewing, the person you're working with, is not just putting it in the MLS, not giving you lip service, but shows you how they are strategically getting more eyeballs on your home. How are they doing? And then each week showing you how they're proving to you how they're getting people to engage and to look at your home and to have conversations which translate into people looking at your home. That is marketing. And just putting in the MLS is not enough in today's market to make that happen, right? Okay. Remember, conforming loan limits, they have gone up. There's a lot of folks now that are seeing a little reprieve that were just, because they had to put a 20% down, they weren't able to accomplish this. But now that they've raised the loan limits, heck, you can buy $1,026,300,000 home, 5% down. 5% down. To me, that is still crazy, right? So when we take into the big picture, really, of what's of value for folks, interest rates, location, those are top considerations when buyers decide to make a move or not. So, as an example, let's head over here to the magic screen. As an example, when we pop over, we have our Freddie Mac page, as you can see. They're showing today at 6.33. This is the National Association of Realtors, one of their chief economists there, kind of an up-and-coming gal. And I highlighted a couple of things here that were super important, right? So this came out on December 8th. It says, housing affordability rose about 8% in the last 4 weeks as mortgage rates moved closer to 6%. Here's what's important. If inflation continues to slow down, mortgage rates may stabilize near 6% in 2023. And I totally agree with that, because really at the end of the day, even though we are anticipating mortgage rates temporarily coming down into the high fours, maybe mid-low fives, again, short, brief, boop, it's going to pop back up into the sixes. And I think that's going to be the new norm. And that is something that is super important to keep in mind, because then as we take a look at, hang on, I believe I have one more for you. Nope, that was it. So as we take a look at what's going to start rolling around the end of first quarter, Q1, middle towards the end, when we start hitting that spring market, March, April, I think we're going to see some very positive numbers coming out. Because remember, the feds don't control mortgage rates, okay? They have an effect on mortgage rates, but they don't control it. Remember, the feds control your HELOCs, your credit cards, your HELOC is home equity line of credit, right? Second mortgages. And then you also have, what banks lend to each other, and that is what they control. So they do it to slow down, because if the banks aren't lending out money, or they're pulling back credit availability and they increase costs, naturally that slows everything down, and that's what they're trying to do. And then the Fed will pivot. When the Fed pivots and starts reducing that, almost guaranteed we're going to hit into a recession, which then mortgage rates are going to go down, which they historically do. Home prices start going up, inventory starts going back down, buyers are going to come out of the woodwork, which is why buyers who are sidelined today are going to be paying the ultimate price, because where they have little to no competition now, I mean, we still see multiple offers, but not nearly like we did before. So what we're seeing is better inventory, modest rates, no competition or limited competition, and better protections as a buyer. And then you can always refinance later to drop that down. Huge benefit, right? Versus waiting, might drop down a little bit in price. That would be temporary, because as mortgage rates drop, buyers are coming out naturally, pulling inventory off, multiple offers, prices go up. Where's the benefit? The only benefit is you got to get less protection, pay more, and maybe get a better interest rate. Maybe, right? So why are you waiting and sitting on the fence? Ditch the stirrups and start taking a look at what's out there, because now is the best time to be in front of a seller. Just saying. Anyway, with that, guys, remember, make sure that you subscribe and like. Hopefully you guys are liking a little bit of the change here. We're going to set it up. I prefer to stand show instead of the talking head, but we will get some more great information for you out there. We have a tenant statistic that is showing that tenants are paying on average 22% more for living costs because of increasing inflation and not being able to control their housing, and they're paying more than a homeowner on a fixed mortgage. In the meantime, I will see you on the next video, and I hope you guys have an absolutely beautiful day. Take care.